Hi, I'm Jimmy. In this video, we're looking at the many deals that OpenAI has done in recent months with different technology companies. Ultimately, looking at how the deal is structured, what it could mean for that company, and are there any interesting investment opportunities within any of these companies? Okay, first up, we're going to jump in and look at the more recent deal that happened just in the past couple of weeks with AMD. So in early October of 2025, AMD announced that they had a joint partnership with OpenAI. And ultimately, they have to deliver 6 gigawatts of AMD GPUs. GPU is a graphics processing unit. Typically, this has been Nvidia's specialty, but now AMD is becoming a major player in that game real fast. And ultimately, 6 gigawatts it's like the power capacity of the data center that they're populating. So they're putting all their chips, all their GPUs into the data center, and it will have a power capacity of about 6 gigawatts of power. If we're curious, from what I looked up, that's enough to power about 5 million homes in the United States. So that's a lot of power. This is going to be a ton of chips. Now, they're supposed to be delivered in different tranches over the next 4 years. Ultimately, it's expected that the first gigawatt is going to be delivered in the second half of 2026. And this is expected to bring in tens of billions of dollars of revenue to AMD. In fact, AMD in a press release said they expected it could be north of $100 billion over the next 4 years. Now, one interesting part of this particular deal is that OpenAI gets warrants in AMD. That's kind of like stock options. So essentially, they'll get about 160 million shares valued at, or that they would get priced at a penny apiece. So they would essentially pay 1 penny for each share, 160 million shares. That wouldn't hit until the final 6 gigawatts of chips were delivered and installed in the data centers. But still, that's about a 10% dilution to AMD. Now, the CFO of AMD has come out and said, don't worry about it because this will be highly accretive to AMD's earnings. And ultimately, what this means is that, yes, we're going to dilute shareholders by 10%, but we're going to drastically increase earnings per share by well more than 10%. So it's kind of worth it. Based on the numbers that I've seen on the analyst reports that I've read, this seems like this is very much going to be worth it. And when we jump in and look at, now we'll compare all the companies at the end, but when we jump in and look at some of their numbers, they have strong income statement, a strong balance sheet, a strong cash flow statement. Their PE ratio is a bit on the high end. We'll come back to this, but ultimately, this company, when we jump over to their fair value estimates page, we can see this is a chart of free cash flow. And we can see that analysts are expecting for free cash flow numbers to ramp up a ton over the next couple of years. So clearly, this is a very good thing for AMD stock. Okay, now we jump over to the next company that has done fairly well recently. You might have heard of it, Nvidia. Nvidia also has some recent deals with OpenAI. Okay, now Nvidia's deal is a little bit different than AMD's was. So AMD was giving OpenAI some of their shares. Nvidia, on the other hand, is making an investment in OpenAI. Now, they're making a $100 billion investment in OpenAI. And in return, one of the things that they're getting in return is that they're deploying 10 gigawatts worth of data center chips. That's a few different things for Nvidia GPUs and other things. But as you can see, it's kind of similar to what AMD did, but bigger. I think one of the most interesting parts of this is the fact that Nvidia is making an investment in OpenAI and essentially getting a piece of OpenAI. Now, I read some estimates estimating that their $100 billion investment in OpenAI could be worth $500 billion in the not too distant future. So in theory, this is a good investment. Now, I will point out that this $100 billion that they plan on giving OpenAI doesn't necessarily have to be cash. It's not like they're writing a check $400 billion. In fact, it looks like a lot of what OpenAI is getting is chips. So let's say GPU chips from Nvidia. Now, essentially, this has created some criticism in that it's kind of like a circle deal where Nvidia gets a piece, they get an investment, it counts as an investment in OpenAI, and they give them chips, and that gives them revenue. Even though, in theory, in that example, no cash would exchange hands. Now, to better understand the numbers, let's just use a hypothetical example of how this could work. So it's estimated that for a new data center, for OpenAI to put up a new data center, it cost about $50 billion. Well, it's estimated that $35 billion would go towards hardware. Now, all of that wouldn't necessarily be NVIDIA hardware, but they, from what I read from the press releases and from different analyst reports, the 10 gigawatts that NVIDIA is going to install would be about $280 or so billion in revenue to NVIDIA. But think about it like this. If NVIDIA is giving them chips and those chips are counting as towards their investment, well, they're not necessarily getting cash back. Now, that could be important because according to the rules of accounting, well, they would count that revenue. That, in theory, would inflate their revenue a decent amount because they are, in fact, selling it, if you want to call that, to OpenAI. But what wouldn't happen is they would not receive the cash from OpenAI. Now, I only bring that up because I think it'll be important for us to watch the revenue increases versus the free cash flow increases. Free cash flow in that example wouldn't go up as much. Now, in the case of NVIDIA, it's somewhat irrelevant because, again, OpenAI is buying some chips. They already have. OpenAI and NVIDIA have been in bed for a while. Again, if we jump over to the Investors Grow website and we narrow in on their free cash flow numbers, well, free cash flow has already ramped up a ton. And as you can see with analyst estimates here, they are expected, despite this anomaly in how they might account for this new 10 gigawatts of investment between or let's say 10 gigawatt deal between OpenAI and NVIDIA, free cash flow is expected to increase plenty. Now, going back to the summary page on the Investors Grow website, well, we can see here that they have solid income statement, cash flow statement, balance sheet. And again, we'll make a minor note of the forward PE ratio, but we'll compare all these at the end. Okay, now let's jump over and look at Oracle. So Oracle got a deal. Now, they announced in an SEC filing that they signed a $30 billion a year contract for their Oracle Cloud. This was later confirmed to be OpenAI. But here's what's interesting about Oracle is that Oracle's cloud hasn't been one of the premier players in the industry. Really, it's been three players. AWS, which is Amazon Web Services, Azure, which is Microsoft, and then Google Cloud. Those have been the three big players. So Oracle picking up this massive contract that ultimately pushes them to kind of the forefront of big players in the industry. Now, this deal is tied to OpenAI's Stargate project, which they're building down in Texas. And Oracle got a 4.5 gigawatt piece of this project, essentially. Now, they later came out and said they're expecting there's a $300 billion deal within this whole thing that's supposed to start taking place in 2027. And once it's up and running, it's expected to bring in tens of billions of dollars a year in revenue to Oracle. Now, I think that one of the interesting parts about this whole deal for Oracle is that there's also the added benefit of let's say, the reputational boost that this deal does. So where previously OpenAI has focused primarily on the big cloud, companies like AWS or Azure or Google Cloud, where they've primarily stuck there. For a long time, they were just going with Azure. We'll touch on Microsoft in a minute. But now that they brought Oracle into the fray, if you will. Well, what if a normal customer was going to wanted to get some, cloud services where previously maybe we're going to focus on just one of the three major producers. Now Oracle's suddenly a viable candidate. If they're good enough for ChatGPT and OpenAI, well, maybe they're good enough for a lot of customers. So this really has the potential to be a massive boost to what kind of Oracle brings to the table. This relaunches, and Oracle's been around for a long time, and this relaunches their growth phase. Now, some have argued that this is kind of a little bit riskier of a situation than the other two companies that we previously looked at. From the standpoint of Oracle has to lay out a decent amount of capital expenditures up front to build the 4.5 gigawatt data center to set up their cloud to be able to handle all of this stuff. They have the contract, the $300 billion contract, which comes into effect in 2027. So it's kind of, they have to pay now and then they get paid later in a couple of years. So in theory, if something were to happen and OpenAI's growth were to slow or something were to happen like that, well, in theory, that could hurt Oracle more than it might hurt the other companies. Now, I would point out that Oracle does have the $30 billion contract in place. And surely, I haven't been able to find the actual contract, but I assume that there's some, let's say, minimum purchases in there, which would help protect them a bit. Now, I don't think that the risk of AI in the next 2 or 3 years slowing down all that much is a major risk for us to be worried about. But I just want to bring it out as a potential risk. Now, when we jump over and look at the Investors Grow website, this one's looking a little bit differently. Like I said, the other major companies in all these deals have been growing for a long time. Well, if we look at their cash flow statement and income statement, and even their balance sheet here, well, you can see their cash flow statement, we currently have flagged as speculative. So on the Investors Go website, you can get up to 3 stars, 1, 2, or 3. You can see for the cash flow, it's a 1. For the income statement, it's a 2. Well, the idea is that it measures the growth, it measures the free cash flow relative to cash flow from operations, things like that. Basically, what are they doing with their cash? How much cash are they generating? Is that growing a lot? It's been kind of stagnant. And then when we jump over and look at the fair value section of the Investors Grow website, well, we can see we have analyst estimates here. And analyst estimates have free cash flow declining a decent amount. And if we think about it, this makes a lot of sense. They have to lay out a ton of money up front to build out their future growth. But we could see in the very final year, well, free cash flow is expected to flip around. And that is largely based off of the expectations that they have for free cash flow from these big deal, from this gigantic deal with an OpenAI. So again, from a value perspective or from a long-term turnaround story, this could be interesting. We'll come back to that at the end. For now, let's jump over and look at Microsoft. So Microsoft has sort of a storied history with ChatGPT or OpenAI. So back in 2019, they invested $1 billion. And leading up to 2023, they'd invested more and more. They got up to like $12 or $13 billion by 2023. And then in 2023, they had signed a deal, ultimately saying that they would get that ChatGPT or OpenAI would exclusively use Microsoft Azure. Now, in 2019, when they had originally invested, OpenAI was a nonprofit company. By 2023, they had shifted to a partially profit company where Microsoft would get a piece of the profit, but it was capped. They were limited as to how much money they could make. Well, now there's talk. Fast forward to, let's say, 2025, the beginning of 2025, and ChatGPT or OpenAI came out and said, we're not going to exclusively use just Azure anymore. Now, this deal had been very good for Microsoft leading up to 2025. They got first access to ChatGPT 4.0. They had integrated that and they had kind of first access to it. They had integrated that into Bing. And they had kind of used it for a lot of their products to help ramp up their products, compete with competitors like Google. But in 2025, it started to shift away from that. And now there's talk about ChatGPT converting themselves to a full for-profit company and perhaps even going through the IPO process, where if that were the case, Microsoft would likely end up with a very big piece. So according to the capped deal that they had, the story was that Microsoft owned 49% of OpenAI. And if that were to be true, if that were to carry forward, now they might get diluted some as the story goes forward. We don't really know. But if they were to go profitable, in theory, they might have a massive exposure to probably the biggest AI company in the world, definitely the biggest AI company in the world. So that is one way that Microsoft could profit from this whole deal with OpenAI. Now, yes, OpenAI has expanded the platforms that they're allowed to use. That's what made the whole Oracle deal we just looked at even possible. Now they expanded it, but Microsoft has also expanded what they're doing from an AI perspective. They've made investments in some of OpenAI's competitors to try to, let's say, increase their breadth of investments in OpenAI. Now, I personally love Microsoft as a company. This is a stock that I personally own. And I think that their investment in AI is good. Their deal with OpenAI, I think, is fantastic. And it worked out very well for both organizations, despite the kind of hills and valleys that their relationship has gone through. But from an investment perspective, when we jump over to the Investors Grow website and we look at some of the key details for Microsoft, we can see that their financial statements look quite strong. And when we jump in and look at their fair value, when we look at the free cash flow estimates for Microsoft, clearly this doesn't appear like it's going to hurt them all that much. In fact, analysts have their free cash flow estimates at north of $140 billion in just a few years. So this is a massive company. And I think that their deal with OpenAI has been a good one. And it has evolved in recent years. But I think that both companies, I think it's been a win-win situation. And I'm not sure that that's going to completely fall apart on them now. I think that despite the fact that the deal has changed, I thought that the loss of the exclusive use of Azure was going to hurt them. But I think at this point, it's probably a net okay thing with both companies giving each other a little freedom, especially considering the fact that they do own a piece of them. And if OpenAI does go public, well, that's probably going to be worth a pretty penny to Microsoft. Okay, now let's jump over and take a look at Alphabet. Now, really, I know Alphabet is the parent company, but we're actually going to focus on Google Cloud since that's where the deal is with OpenAI. Now, this one was a bit unusual in that Google and OpenAI or ChatGPT have been rivals. In fact, it's been stated many times that ChatGPT is essentially going to put Google, at least the search part of Google, out of business. Well, maybe not out of business, but you know what I mean? Take away a whole bunch of business from them. So earlier this year, when ChatGPT and Google signed a deal saying that Google Cloud was going to be a major provider of cloud services to OpenAI, well, obviously that made big headlines. Now, interestingly, they have not disclosed a whole bunch of the nuances of how much they're going to be spending with Google. Now, what's interesting about this deal is that Google is not making an investment in OpenAI. It's not like what a lot of the other companies are doing, where they're making an investment in OpenAI and they get something in return. This is just as straight. We're going to use Google Cloud. We're going to use their TPUs instead of like Nvidia's GPUs. They're going to use Google. Google has their own kind of proprietary one. Their processing units, their tensor processing units, where it's well built for AI. It's that type of thing. And if anything, I think it helps diversify things a bit for OpenAI. It gives them a bit more access to different locations around the US, around Europe. Google has a lot of cloud locations around the world. This helps with that, and it expands what Google is doing, what OpenAI is doing beyond what was previously just Azure, and now Azure and Oracle and Google Cloud. So again, I think that this is a solid business. And when we're on the Investors Grow website, where we could see they have a strong income statement, a strong balance sheet, a decent cash flow statement. That's likely to get better. And we can see that when we jump over to the fair value section of the website. And when we jump in and look specifically at discounted free cash flow, we can see that their free cash flow numbers are expected to ramp up. They're expected to ramp up in a couple of years even more. And that is largely driven by what we're expecting, not just OpenAI to do, but even Google's AI division to generate. So overall, I think this is a solid deal for Google. Okay, now when we jump in and look at the investment side of each of these companies, well, clearly there's a problem. If you were noticing, as we got to the fair value section of each of these companies, they've all had a very good jump, especially since these deals with OpenAI was announced. So whether or not we want to invest at this price is really up to each individual on a personal basis. If we're curious, I took the forward PE from each of these companies, and we can see them all here, so we can get an idea of which ones we'd be doing. Now, just so we're on the same page, forward PE says, how much are we willing to pay for $1 of next year's earnings? So if you were to look at, forward PE of 43, that would mean that we're paying $43 today for $1 of next year's earnings. Now, some of these companies, we saw a lot of them, especially a company like Oracle, well, next year's earnings might not be fully representative of the whole picture. A lot of this deal, a lot of the value will come 3 or 4 years out. Now, of course, the assumption here is that AI will continue on this magnificent boom that it's had. Now, there is talk out there about whether or not this can be maintained. Is there a bubble forming? The thing is, a lot of these companies are investing a ton of money into this. Not just the companies that we've talked about in this video, but almost every company is putting something towards AI these days. How long can that be maintained? How long can that continue to go up? We don't know. It's really tricky to say. Now, I already own a couple of these. I'll put a star next to the ones that I personally own. I don't know if I would invest in them at this point at the current price. I think I'd prefer to wait for a pullback, especially since the AI boom, the AI, let's say, investment may last for a long time. It may last for, let's say, the next 5 or 10 years, maybe longer. And if that would be the case, surely at some point over that time, we're going to get a pullback in these stocks and maybe be able to get them at a better price. Now, if you'd like to get access to the Investors Grow website, where we got all these numbers from, you saw it being used throughout this video, well, I'll leave a link right here and a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.